Thanks for staying on with us. Still tuned into First Trades. It's V-Mart that merits a mention. That stock on a tear in today's trading session, largely on the back of the profits, jumping a solid 40%. Let's understand what the outlook is when it comes to demand trends, growth and expansion. If we could pull up the stock price, there you go, 8% on last count. Anand Agarwal is the CFO now joining in. Thanks so much for taking time out. Just let's talk about what really has contributed to your results this quarter in terms of the strong growth, your footfalls, what have been the demand trends and how have things shaped up? Will it continue into the coming quarters?
Absolutely. I think we must hope and wish that it should definitely continue. But I think I must also add that the last quarter or quarter three usually is always the strongest quarter for a company like us, which is into retail, and good winters or relatively good winters and also a strong festive season definitely helped in improving the top line as well as the bottom line. We've seen some slightly better consumer footfalls. The consumer footfalls went up by 23%, which happened after a long time, and that's a good story to build on. So I'm just hoping that we should be able to build on this momentum and keep continuing to give the value that the mass value customer demands, and thereby grow profitably quarter on quarter.
Anand, value fashion is one of the fastest growing categories, right? And holds a very substantial potential as well, I assume. Do you believe that this space is perhaps getting a bit overcrowded after Zudio's success with the entry of Reliance Retail, Shoppers Stop, and any challenges you think there are to your own business and growth?
No, you are absolutely right. I will not say it's getting overcrowded, but definitely there's a lot of interest, and interest usually comes when there is a a requirement or there is a possibility on the ground. So we started this business almost 20 years back, and we were the first movers in this segment, and we have seen or built up this market from the scratch. The new entry of very strong players also is a testimony to the fact that there is a lot of potential. In fact, even now, the organized retail is less than 10% if you look at our overall India basis. And all of us still are competing in the same space. We have been more a pioneer in the tier 2, tier 3 towns, and that is where we still specialize in. A lot of action is happening more in the value retail segment for the upwardly mobile in the tier 1 or tier 2 segment, but we still remain very, very focused on tier 2, tier 3. As far as challenges are concerned, I think the biggest challenge is the inflationary linked, loss of consumer appetite, or at least at the lower middle class level. There is still a lot of loss of discretionary spending power. And that is something that we have seen slight rectification happening in the last 6 months or last 9 months. And that is what I think the government and also all of us are wanting to make sure that, we are able to give more money to the common man so that there can be more revival of consumer demand at the lower level.
All right. And LimeRoad has seen an EBIT loss in the quarter. When will you break even?
So we are targeting to at least, get to break even in next financial year, which is 24-25. Consecutively, our losses have been coming down on LimeRoad. So this quarter also our losses came down by 29%. The quarter before that also the losses came down by almost 21%. So it's a steady story. We've been building on a profitable growth, a sustainable growth. We are not building it as a top line engine. We are not burning a lot of money, but we are being very, very cautious and very, very cautious in our approach to make sure that that business remains very profitable, at least in the mid to long term.
Okay, and your unlimited stores contributed about 16% of the total revenue. What is the outlook when it comes to your mix going forward?
So my guess is that we will still continue to keep unlimited as around 17 to 20% of our total turnover. So unlimited is predominantly in the South India region, and South is a very big and important market for us. We have explored that courtesy the unlimited team, and that's helped very, very strongly in the overall growth of the business. We've been opening new stores in South India under the unlimited brand, and they have been doing quite well. And we are quite optimistic on continuing the growth story at Unlimited through opening of new stores.
Right. What is then the outlook that you have on your margins and the store opening strategy for both the next quarter as well as the full year?
So we will continue to invest in opening new stores. We will also close down a few stores wherever we sense that there is a loss of profitability or loss of margins in some of these areas. But otherwise, I think on a consistent basis, we should definitely look at around 50 store addition year on year. This year also, we've already opened around 40 odd stores, and next year also, I think we should be looking at least opening 50 odd stores. I think on the margin front, definitely we will want to, ensure that we are able to give the maximum value to the customer, and that's what we are known for. So we are not looking at margin expansion. We are definitely looking at ensuring that we are able to get the footfalls back, get the consumer interest back, and give the maximum value to the customer. So we will be prepared to, even compromise on margins a little bit so that we are able to build on a very sustainable, long-term story.
And what is the store opening strategy? And just give us a sense, down the line, what your message will be to shareholders in terms of your overall Capex plans, how you're looking at expansion and growth?
We've done a lot of Capex in the last 2-3 years. We have done 2 acquisitions, very strong acquisitions, one in South India in the form of Unlimited, and then the online marketplace for LimeRoad. We've also invested a lot in a new warehouse facility that we built up last year. So large part of Capex has already happened. I think we have invested ahead of the curve. We have invested in future capability building. And I think now we are focusing on ensuring that we are able to leverage these Capex, these large spends that we had done, into building something more meaningful. Having said that, I think the larger strategy remains to penetrate deeper into tier 2, tier 3 towns of Pan India, get into areas in, as part of the cluster-based formation strategy that we have always had, and continue to give more value to the lower middle class customer that has always remained very loyal to us. So our loyalty sales have always remained upwards of 60%, and that is something that we are very proud of and that we want to build on more and more. South India is a new territory. We have relatively entered that in the last 2 years only, and we want to build more in South India, as we are getting much better results in South India as compared to some of the other regions, and that is a very good and strong growth engine that we will want to continue to build on. On the digital space, we have been making a lot of stride, and I think LimeRoad has been a very strong asset that we have built up, and we are continuing to invest in that, not in terms of loss funding, but more in terms of capability building and integrating that with the the offline retail stores that V-Mart has, so that we are able to give a much better omni experience to all channels of customers.
Okay, thanks for joining in. Good to have you on board.